So Oliver, your session just now was on transaction banking. I mean, transaction been around for a while. Is it still the same? You seem to be suggesting lots of changes.
Well, first element of change, which is a bit to our own benefit, is transaction banking is an old business, but it's been reevaluated. So we would say old business, new money. It used to be a tick box for corporate banks. You needed to offer that, but it was pretty unstrategic. It was big IT investments. You were really after the lending piece, and that was the exciting part in deals and IPOs. And that has changed after the crisis. I think transaction banking has been rediscovered as something which actually gives you a fairly stable revenue base. It is something which is extremely important because it's a service differentiator. It's not a product differentiator between banks. So local banks can actually make a real difference as well as global banks. And it's strategically important all at once because it's big. It's actually about half of the corporate banking revenues in most places. It is profitable, especially when you weigh it against equity or assets. Double the profitability of the rest of corporate banking. An average customer with that transaction banking services stays much longer with his bank than anybody else.
But that sort of world has been set against a rapidly changing background now. Everything's moving so quickly. Transaction banking has always been a bit staid. How does that square up?
Well, I think first element is where the growth is, because indeed the growth is changing, going to Asia. So I think there we have half of the world growth we expect it to come from Asia. But also in behavior and context it's changing. In the sense that customers today, corporate as well as retail, don't expect the same thing anymore. They expect much more. And the key element is like customers don't really want to pay for payment. They want to pay for business. They want to sell goods or buy goods, but not necessarily the payment. And that is something that is often overlooked. We're focusing on the 30 milliseconds faster transaction, but not on what people can do with it. And technology is actually changing that even more rapidly because for a long time, corporate banks have said digital, that's retail and it's mobile and it's M-Pesa and that type of stuff. But how can you explain to a CFO that he can actually get a loan in 3 minutes on his phone, but when he's in his corporate office, it doesn't work anymore because it will take 2 weeks to get the appointment with the credit officer. So there is a lot of change needed there.
That consumerization element is something that seems to have suddenly just hit the world. It's been there in the consumer space, in retail it's been there for a while, but in transaction?
It's been there for a while. I think it's been changed by a number of things. It's like we do see an element of some infrastructures and standards coming up that make it a bit more easy for customers to get some services. But also the fact that a lot of the competition is now coming from models, even more than players that are not the typical banking ones.
Right.
And most of these players actually came in through underserved niches, like PayPal came in through eBay and Square came in through micro merchants. And then they move into actually partnering with incumbents to get into the more juicy parts of the value chain. And what we're waiting for is for these guys to completely throw the value chain up in disorder. We're seeing some of that happening in China, where some of the PayPal, like Alipay, the PayPal equivalent, is like getting into banking in a massive way. And that is really changing the way banks should do business.
So, in terms of moving ahead over the next few years, what are the challenges navigating that map?
But obviously there is a number of staple case things, like it has to be impeccable and flawlessly executed. You'll need to do stuff on your IT system because legacy systems that count in their hundreds for a big bank, that is not feasible. You'll need to take care of where you're focusing your scale because there is operations. But the big changes we would say is, on one hand, your front end, your sales staff should be trained much more to think like a CFO than to think like a banker. Because the biggest change they could make for their client is delivering value for their business, not necessarily selling them a banking product. So I think there is a lot of things in there for banks to work on. So my point here was, maybe rather than having CFOs that are former bankers, we should have bankers that are former CFOs.
That's a new career option for them.
A new career option for all of us. Yeah. The other element is digital commercial banking. I mentioned it because digital is changing not only the way in which people connect to their bank. I mean, most people in this conference were looking at their phone more often than they're watching the presenter. So they actually have a contact interface with the world. That needs to be used and adapted, and also across multiple channels that have to be factored in. Typically the branch doesn't know that somebody has been buying something on the digital channel. The other element is your operations. You can't have a paper mortgage flow following a digital application. It cannot take 3 days to actually execute a process which was closed in 30 minutes. There is the element of what new products do you build around that, but then even more, how do you use all the new competences, all the new tools, all the big data you have, not to build a new product, but to help giving better advice to your customers, helping your own people to provide a more efficient service to your clients. And that internal focus is probably the first one that needs to be taken.
So it's basically do everything perfectly and get better as well.
Yeah.
Nothing difficult about that at all.
The element and that this came up is that the fact that there is a lot of concerns, and most people seem to be in their day job indeed focused on executing on the existing piece, which is the first priority for sure. But we shouldn't forget that there is indeed a next horizon, and that some of these outside players don't have the legacy to take care of.
Right.
So they're going full steam for the new generation. Maybe one of the ways that could be solved, that we could be solving that, is around a new generation of partnerships. I mean, banking clubs have been around for a long time.
Yeah.
White labeling has been around. One-on-one partnerships as well, but maybe we should think about other production partnerships like they do in automotive, or their code sharing equivalents like they do in airlines, or how can we think about the mobile virtual network equivalent in banking. So I think the banking industry might actually benefit from looking at how other industries have solved some of these issues.
That would be an interesting thing. For now, thank you very much.
Thank you.